Hello, everyone. Good morning. My name is John Paul, DayTradeToWin.com. We're doing a split screen here with, on the right side, the Trade Scalper and the signals as the day begins. They just began. It's actually the best part of the day to trade within the first few hours of the day. And on the left side, we have the Atlas line, which has not yet produced a signal. So what I want to do is I want to show you how, if you are trading either the Trade Scalper software or if you're using the Atlas line software, or if you're using both, how you would set this up. So you could take a look at whichever signal occurs first and how you could use both of the methods in conjunction or together. You don't have to. You don't need one to work without the other. They are independent, but it's nice to see when you have an opportunity for a sell, and the Atlas line is also short as well as a long on the Trade Scalper, and the Atlas line is also long. So my goal is to show you today, this morning, the trades that set up when you're using both of these methods. They're completely separate and independent. They're both based off of price action, but how do you apply them both at the same time if you wanted to do so? So before I begin, remember that trading is risky. Please do not trade with funds you cannot afford to lose. Talk to your broker, understand the risks of trading, whether it's stocks or futures or options or Forex. There's risk involved with trading. So what we have here on the chart, it's the E-mini S&P for those who are asking. Today is January 16th, 2020. I'd like to do another video on the January effect, which I do every year for the last 10, 11 years at least, teaching people. So what we have is a long on the Atlas line. That's great. So what we have is an exact entry, 33.05 and a quarter. So 33.05 and a quarter to go long. A couple of things here. The first thing is you see how we're entering close to the Atlas line, which is printed there in that beige color right there. This tells me that the trade is at the beginning of its move up. So we're not entering that far away from the Atlas line. It's a good filter to understand the closer you enter, the better positioned, or the more of a beginning move. If you're entering further away, it becomes not a bad trade, but I think a more riskier trade, right? We want to see it test where the market has been. And another option when it comes to
Order
price action
filled.
is to look at where the highs are. You see the high at 33.0850. We're heading back up there potentially, which means that we have some room to make that test. So price action trading is very important to understand the testing of highs and lows reaching there. What I'm doing here is I'm going to add the ATR, the average true range, to the chart. I want to make sure I understand the current conditions. The ATR is an indicator that I teach and I talk about in my training to tell me what to expect as far as the distance the market will make when you're in a trade. You obviously cannot trade the same way when the market is slow as compared to when the market is more volatile or faster. We have to adapt to the market conditions. So part of price action and what I teach is understanding there is a difference between the market moving with a certain volatility or speed in comparison to when the market is moving slower. Stops and targets have to be adjusted. So I just added here the markers and the text to show everyone. Just a second, let me adjust the microphone. And if you're practicing and if you're testing and you want to know where you entered, where you exited, are you following the rules based on the Atlas line or the Trade Scalper, it's nice to have the actual trades printed on your chart. I think that's important while you're practicing. It's a good feature of NinjaTrader. Now I'm going to speed up this video a little bit. I don't want to spend 20 minutes just watching this market. I want to instead discuss something I think is very important. Traders typically don't look at current conditions when they think about price action. I like to think about the current conditions. The reason why I added the ruler where I did, you can see that ruler printed 2.75 points or 2 3/4 of a point, is because at the time that this entry occurred, the ATR indicated 2 3/4 of a point. So that's what I'm looking for as an opportunity. As the ATR changes, now it's a little bit slower. It says 2.44. That's 2 1/4 points. You can definitely adjust your target. So you have to adapt to the market. Okay, I heard the doorbell. That means there's another order, another signal. It's the trade scalper. The trade scalper has a buy at 33.0575. So everybody who has the trade scalper has this order to go long. I have these charts side by side. Whichever signal occurred first, you take. The Atlas line occurred first, so I'm already long. I don't have to double up and go long again on the trade scalper. So if you have one or the other, both are long. They both have their potential stops and their targets. Typically, the trade scalper goes for 3 or 4 ticks. So 33.0575, 33, let's say 0675, that's a target, 1 point from where you entered. And having both methods show me a long or a buy is a good thing. I don't like to see when things are conflicting. I think this is important to understand. You don't want to see one thing long, one thing short. So this is a good thing. So those of you who have the trade scalper, you should be long, and the entry is printed specifically. The target is just about now, or about a tick or so from here. You just got it now for the trade scalper. And the Atlas line, it's a 5-minute chart, so it's a much larger time frame compared to the range chart that I'm using here on the right. So my target's much larger, but also my risk, my stop is much larger as well. Okay, the trade scalper trade is finished, successful, you're out, you're finished. There's no reason to re-enter the trade, look for the next trade. The Atlas line, we still have about 5 minutes left for the time-based stop, which means that I'm not holding any trade beyond 20 minutes. That's a time-based stop. It's something I teach. And so when this gets
Target
filled, which it did just now, you're out. But if you are unable to get a target or a stop after 20 minutes, please exit the trade based on the rules that I teach. You have a higher chance of getting out of a trade at a small win, a small loss, or break even if you just exit the trade within a certain amount of time instead of holding it on for hours and hours on end, hoping it's going to work in your favor. So what we have here is the Atlas line successful. I also just got right now a pullback trade. Those P's that you see, that's another trade for the Atlas line indicating it's a pullback. So entering long again for probably about a point target. Typically the pullback and strength trades only are 1 point or 4 tick trades. And if there's a trade scalper or a scalp trade on the right, it would confirm that everything is still healthy to the long side. And these methods are not similar in any respect. The Atlas line has nothing to do with how the trade scalper trade. They're both price action methods, but they are unique and different. Nothing is based off of moving averages or MACDs, and especially when it comes to optimizing values, what's the perfect optimization value that works today? That'll never work into the future. So nothing here has a value or a link required for optimization. And that's what many systems out there do. They optimize it so it looks beautiful on paper or backtesting, but it never works into the future. So there's no optimization with any of the methods taught. If you're interested in the Atlas line, send me an email. Check out DayTradeToWin.com. If you want the trade scalper, there you have it on the right. My name is John Paul. I'll see you at the next video. Until next time.